So we'll be looking at in these 4 weeks, we'll be looking at quite a number of things. So I dropped the link, or I dropped the course curriculum on the general page. So for today, we'll be looking at just two things, right? We'll be looking at formation of SNR, how SNR levels are formed, and then we'd also look at, right? So we'll look at formation of SNR, and then we'll look at types of SNR. Okay, so typically SNR typically means support and resistance, right? Support and resistance. For every support, it's designed that, or we believe that supports are V levels, right? So when you say a V level, something like this is considered a support. Okay, so V levels are supports, while N levels, N, like letter N, right? Like inverse of the V, are considered resistance. And the idea behind this is to be able to know that the logic the market works with is buying and selling, right? So for every market to be stable, for us to have a stable market, there has to be buyers and there has to be sellers of that commodity or of that product. So it means if what happens usually at a support is that buyers are willing to buy. So at a support, buyers are willing to buy. So we expect that when price comes, taps this level, price would buy. While at a resistance, sellers are willing to sell more, right? So price comes to the resistance level and then starts to drop. So you will see that for every entry, a new support or a new resistance is formed. So when price taps a support level, a new support is formed. So this is a support level, got tapped here, and what happened? This new support level is formed. Why? Because the principle, the logic the market works with is support and resistance, buying and selling, right? Right? This was a resistance level A and N. Okay. So when price came to the resistance level, tapped it, what happened? A new resistance level was formed. Okay. So SNR, or support and resistance, are just designed to show us how the market works. So that's the basic thing about support and resistance. This is the basic. So what happens at support? At support, the market is expected to buy. So this is the support. Let's say support are V's, right? V's, right? And then resistance are N's, right? Okay. So let's see some examples on the chart. Let's see some examples on the chart. I remember I said for what happens at support? At support, we buy at support, right? At support, you expect buy pressure at support. And at resistance, you expect market to sell. And the reason for this is because that's how market works. That's market logic. So price will buy at support and then price will sell at resistance. And the most interesting way to be able to figure out how this works clearly on our chart, right? This is a chart. The most interesting way to figure out this V's and this N's, right, is using the line chart. So I'll show you. So to use the line charts, if you're using a laptop, this is, you just have to come here, then you pick line, right? So this is the line. So let's see. Is this a V? So this is a V, right? This is a V. So let's see. See a V. What happened? Price tapped and then started to buy. I remember I said when price taps a support, what happens? A new support is formed. Is this a new support? Yes, this is a new support. So what happens to that support also? See, price tapped, then started to buy. Okay, so line chart, right? Line chart will show us the V's, to show us the N's. Okay, let's see N's, right? Let's see this example right here. Okay, so this is an N, this is a resistance, right? See that formation. So when price tapped it, what happened? A new resistance was formed, right? Even though price didn't use that resistance, but a new one was formed. Which you can see a new N was formed here. So that's the logic of price action. That's generally what happens with price. Let's see more examples really. Ends. Okay. Market has been buying all these days. Okay, see this line chart. This is an N, right? So what happens? Price taps and then starts to drop. So that's the beauty of support and resistance. So we have these and then we have N's. That's the beauty of support and resistance. So for that means for any given time frame, whether you are checking the daily, the H4, H1, even up to M1, for any given time frame, there's a support and resistance level that price would use for any given time frame at all. There's a support and resistance level that price will use. And that makes us now understand that there is more to price than just looking around. Because if we believe that buyers and sellers are in the marketplace, it means that the best strategy in the world is to trade support and resistance, right? Is to trade support where buyers are buying and to trade resistance where sellers are selling, right? And when we try to move forward a little bit from here, we will see that there are times in the market that price decides to break support. So for example, when you have a V, something like this, rather than price rejecting from here to buy, right, price will break this level and then continue lower. Okay, at support, we said we expect buyers to buy. Okay, but now price breaks that buy pressure that you're expecting from the buyers and now turn this support into a resistance level. So this V now becomes an N. So it means that support when broken can become resistance, and resistance when broken can also become support. So for resistance situation, you have something like this, and then this is your resistance, right? So you're expecting price to sell from here, but no, that did not happen. Price broke, then price will tap this way as support and start to go up. So this N right here will become your V. Resistance becomes support, right? This is resistance becomes support. And then you have support become resistance. So I write that out when support gets broken, we have resistance. And when resistance gets broken, we have support. Okay. So let's see a few examples on the chart. Okay. Support broken, resistance, right? Resistance broken, support. Okay, so let's see. Let's see. All right, so here's an example. This is the N, right? See your N. So price came. Did it tap? No, got broken, right? So what did it become? This is resistance becomes support. Okay, so your N becomes a V, right? Your N becomes a V, resistance becomes support. Another example. Let's see. Let me go to a much lower time frame. Okay, another example right here. So this is your V, right? That's your V. That's your support. And on the support, you're expecting price to come right here and then buy. But no, that did not happen. Price broke your support. So the next thing to do is to sell that support as resistance, right? So you have your V here become N. So in formation of SNR, we can trade traditional support and resistance, and we can also trade them when they get broken. So that's the beauty of what I'm showing you. So when price breaks your level, your support level, you're not worried. Okay. Why? Because you know you're going to trade that area back as resistance. So resistance here tapped, came down, resistance here got broken. Price will use that support to buy. So when resistance is broken, that means you can't sell. When resistance is broken, you're not expected to sell here. You can't sell here, right? You can't sell here because it's broken. You have to wait to buy when it comes back to this level because this resistance has now become a support. When support gets broken, you cannot buy here. If you buy, market is going to take you out, right? If you come here and you start buying, market is just going to come all the way down, boom, retrace, and then continue downwards, right? Why? Because support has now become resistance, and then resistance can also now become support. So these two things are the primary thing when we begin to consider support and resistance. SNRs. So you can call them SNR, support and resistance. So support can become resistance, and resistance can also become support. So this is the basics. This is what you need to do to learn price action. I remember I said that the market works by buying, right? The market works by buying. So it means that let's see. It means that when you buy at support, you would take profits at resistance. Why? When you buy at support level, you're going to take your profits from a resistance level. Okay? Because the idea, so this is a buy entry, for example. So this is a buy. If you enter this buy trade as a buy entry, if you enter somewhere around here, enter here actually, the only way you can exit this trade, leave this trade, is either when your stop loss gets triggered or when your take profit gets triggered. And the only way for them to get triggered is when the market sells. Okay, so on this end of the pipe, okay, on this end of the pipe, market can take its ATP. That means you are exiting the market, you are selling because you entered here. Market can also take your stop loss out by also selling. Okay, market take your TP, take your stop loss by selling. So when you enter a buy trade, the only way to leave that trade is either you sell, you sell. That means you take profit or you hit stop loss. And remember that where do we sell? We sell at resistance. So when you buy at support, you would take your profits at resistance, or the market will take your stop loss out at another resistance. Don't know if that makes sense. Why? Because market moves by buying and selling. See, in a sell scenario, right? When you have a sell scenario like this, where do you sell? You sell at resistance, right? So let's say you sell, let's say there's a resistance here, right? Sorry. Need to drop out. So let's say there's a resistance here and you sell. We are targeting this place, right? When market gets to this place, the only way for you to make profits or to leave the market, leave this trade, is if the market if the market buys what you sold here, right? Market is going to buy what you sold here, going to buy it here, and then you are in profit. So that means there is a support here, right? The only way for market to exit your stop loss is when you hit another support, higher level support here. So why? Because the only way to exit buy position is by selling, and the only way to exit sell position is by buying. So the only way to exit, so by exit I mean either your take profit or your SL. Your SL is okay. The only way to exit a buy position is when you sell, and the only way to exit a sell position is when you buy. And these are very basic things in support and resistance, right? They are pretty basic things in support and resistance. Okay. Now, let's see some examples on the chart, because this further emphasizes that at support, you don't want to be selling. Okay, let's see examples on the chart. All right, so this example right here, this one. This is a support level. So as a buyer, what do you want to do here? What you want to do here is to buy. Why? Because this is a support level. Okay, so where do you want to buy to, right? The next place you want to buy to, where do you want to exit the position? You should exit the position at a resistance level. Now, this is a resistance level right here, which I'm going to explain to you further in future. I'm going to explain today what this level is. So this is another resistance level. So a buyer that buys here will exit this trade, take profit this trade at this resistance level. Why? Because sellers are at the resistance level. Sellers that want to sell the market, they are at the resistance level. And you see them. So immediately price tapped. What happened? Price started to sell. Why did price start selling? See, price tapped the resistance. He formed a new resistance right here, right? Formed that new resistance, tapped, and then started to sell. Why? Because at resistance, sellers are waiting to sell. Okay. At support, buyers are waiting to buy. Okay. Let's say a sell example, right? Let's say a sell example. Let's see. So now this is N, right? This is an N. So this N here. That's an N, right? So what happened at the end? Say price came, tapped that level, the resistance level. At resistance level, sellers are willing to sell, right? Tap that level and price continued to sell up to which level? Until we got to this support. When we got to this support, which you can further refine to this area, because that's the V, right? This is the V ray. So when we got to this support, what happened? We started to buy back up. Why? Because we have buyers at support and we have sellers at resistance. This is pretty basic SNR stuff. So now, when we now understand how SNRs are formed, or when we understand support and resistance with these basics, we can now go into the anatomy of a candlestick. How is a candle formed? What are the details in a candle? Okay, so let's see anatomy of a candlestick. So let's say, for example, we have this buy candle, right? Green is buy, green. So green, let me change green. Has to be very green, right? So yeah, so green is buy, and you have this, and you also have a sell candle, right? Sell is red, right? Okay, so you have a sell candle right here. So these are very basic stuff that you have to just pay attention to. Okay, the aim of this course is such that whoever is picking this course up, if you're a beginner, you can do very well with support and resistance, right? That's the aim of this course. Okay, so anatomy of a candlestick. Now, this is a buy candle. For a buy candle, price opens at this portion of the candle. This is the opening price of the candle, right? Price opens at this level. It will come down a little bit this way, then it's going to go up very, very high, and then it's going to close here. Okay. Why? Because when you're buying, you're going up, right? So it opens low and closes higher. So I'll write that out so that it's very clear. So buy candles open low and closes high. It closes higher, it closes high. Open at the lower price, this level, and then comes to close at the upper price. So this is the closing price here, this level and this level. Why for a sell candle? For a sell candle, we are coming down, right? We are selling down. So price will open at this level, going to go higher a little bit. And then you see this sharp drop, and then price returns this way. Closes that way. That's for a sell candle. Okay? That's for a sell candle. So the interesting thing is for a sell candle, right? Opens high, opens high and close lower. Sell candle open high, open at the higher price, and it's going to close at a much lower price. So it means that at the open of a buy candle, right? I want to ask you a question now. At the open of a buy candle, at this level, what do we have at this level, at this open? A support or a resistance? A support or a resistance? Can use the chat box to answer, right? Do we have a support or a resistance? Good, good, good. Okay, so I'm going to allow you guys to be able to talk. So you can use your mic now, right? All right. So at the open of a buy candle, we have support. Okay, very good. At the close of a buy candle, what do we have? Support or resistance? You can use your mic, please. You can use your mic if you're talking. Always talking. Who is talking? So at the close, what do we have at the close of the buy candle? Sorry, I can't hear anyone. What do you have at the close of buy candles, right? Okay. Resistance at the close. Okay, okay. So at the close of buy candles, we have resistance levels, right? Okay. So again, at this level, at the open of sell candles, what do we have? Support or resistance? At the open of sell candles, what do we have? Do we have support or do we have resistance, right? Okay, resistance at sell open, okay, right? At the close of sell candle, what do we have? Resistance or support? At the close of sell candles, what do we have? We have support. For so it means closing price for buy candle, we have resistance, and closing price for sell candle, we have support. Okay. Opening price of buy candle, we have uh, opening price, sorry, we have support, and closing, oh sorry, opening and opening price of sell candle, we have resistance. See, this is very, very important, right? This is very important. Okay, let's see some examples on the chart. Let's see examples on the chart. Okay, so is this a buy candle or a sell candle? But for this to be fast, I need you guys to unmute your mic. So don't sleep here, please. This is a buy candle or a sell candle? This all it is. All right. So this is a sell candle, and we said at the closing price of sell candles, we have support. So when price came, tapped this level, so we saw that immediate buy ejection, right? Buyers will buy at support. So we saw immediate buy ejection, and then price started to buy. And we said at the closing price of buy candles. So I'll show you closing price, buy candle. This one, this closing price, this is a closing price, right? So at the closing price of buy candle, what do we have? At the closing price of buy candles, we have resistance. So it means that what we have here, this new buy candle forming is a type of breakout. So I would explain much later today actually. So it's a type of breakout, and then this is a candle that should have been a resistance, but broke out. And when price came back to that level, we saw buys, right? We saw buys, okay? The same thing here. We said at the open of sell candle, we have resistance, right? So this is the open of sell candle, okay? This is the candle that is supposed to sell from this open, right? This candle was supposed to sell from this open, but that did not happen. So this is a breakout. This guy is not actually showing very well, right? So this is a breakout. So this guy got broken, this resistance got broken, and now it became a support for price to buy from, or it becomes a support from price to buy from rather. So that's the anatomy of a candlestick. Right, that's the anatomy of candlesticks. So we now need to talk about SNR levels. Okay, so we spoke about how SNRs are formed, spoke about the fact that support can become resistance, resistance can become support, and all those things. Okay, so a very good thing to talk about right now. So let me see if I can shrink this. Okay, right. So let's go. All right. So SNR levels. SNR levels. The first SNR level we'll be talking about are engulfings. Okay, engulfings. And there are two types of engulfing, right? There are two types. We have number one, we have engulfing buy, and B, we have engulfing sell. So we have EG buy and then we have EG sell. Okay, so there are two types of engulfings, EG buy and EG sell. All right. The next SNR level we'll look at are classic SNRs, classic SNRs. Okay. Then we'll look at head and shoulder SNR, head and shoulder SNR. And then we'll look at open and close SNR, which is the reason why I explained this anatomy of candlestick. So when we get there, we'll explain better. So these four SNRs are important SNR levels. And the last one, is that the fifth one or the fourth one? Yeah, the fifth one is the breakout SNR. So the breakout SNR, there are many types. For breakout SNR, we have engulfing fill. We have the engulfing fill. We have broken HMS. That's broken head and shoulders. Broken head and shoulders. And we have broken open and close levels. Okay. So let's talk about engulfing first. Engulfing. So let's see. So a candle is considered to be an engulfing when the candle next to it completely absorbs all that it has to give. So for example, this candle, so this will be a buy candle, right? And then this sell candle now engulfs the buy candle. Okay, So this is engulfing sell. Now I said there are two types of engulfing. We have engulfing buy, then we have engulfing sell. So this is an example of engulfing sell, right? So engulfing sell, you have this. So for engulfing buy, engulfings are actually very powerful, right? They are very, very powerful because they have a lot of support and resistance inside them. So the engulfing candle pattern, that's the most support and resistance level we can ever find in any chart pattern. That makes them very, very powerful. That's why they are very, very powerful. Okay, so now I'll, let's do something quick. Let's do something quick. So we are going to draw the anatomy of this candle and this candle. Okay, so this is a sell candle. I want you to follow me truly or thoroughly. The price opened here for this is a buy candle and this is a sell candle. So for a buy candle, the price opens low, right? Comes lower, right? Comes up, right? And then closes here. Okay. Now the closing price of this buy candle is the opening price of this sell candle. Okay. This buy candle closed here. The opening candle or the sell candle opened at that same price. Okay, because that's how the market works per time frame. So the sell candle opened here, just went high a bit, and then came all the way down, right? To this low, and then closed here. Now, I'm going to bring this out for you, this pattern out for you. So we are going to count the support and resistance levels that are on this level. Okay, we're going to count the support and resistance level that are here. So I was going to use this as an example, but this might not carry the weight of what I want. So now the first is this level. This is the first level here. This level, support or resistance. Remember the open of a buy candle. Remember what we said about the open of a buy candle. See, the open of a buy candle, opening price of a buy candle is what? Support, right? So this is the opening price of this buy candle. So we have support level right here. Okay. So we have the closing price of the buy candle. Closing price of buy candle, we have resistance. So on this SNR level, we have two good support and resistance level if we consider this buy candle. Now, this same level that is now considered resistance in this regard. Remember, closing price of buy candle is resistance. Opening price of sell candle is resistance, right? So the opening price of this sell candle also resistance. So I'll put that again. That's SNR level 3, right? SNR level 3. So first SNR level support, second resistance, third resistance, and then the final one, which is this one, the closing price of the sell candle support. So no other candle, that's 4 SNRs in one candle in a candle pattern. Okay, 4 SNRs in a candle pattern. And then no other candle pattern has this much SNR level. Okay, and price would use any of these levels when the time comes. That's not what we are talking about right now. Okay, so engulfings are very, very powerful, very, very powerful. And the interesting thing is that the engulfing can come in different forms. So there are different forms of engulfing. Okay, not just one type of engulfing. Engulfing can okay. Let me share something for you guys real quick. So this is a bearish engulfing. For a valid bearish engulfing, I must point that out. Okay. For a valid bearish engulfing, can I get a pen? For a valid bearish engulfing, the bearish candle must engulf the wick of the buy candle. This bearish candle must engulf the wick of this buy candle for it to be a valid bearish engulfing. The same thing for a valid bullish engulfing. For a valid bullish engulfing, the wick of this bullish candle must engulf the wick and the body. In fact, the wick or the body of this bullish candle must engulf the wick of this bearish candle for us to have a valid engulfing. You see, the wick engulfs this. So it's not just the body. The wick has to engulf. If we are selling, you consider the lower wick since it's a bearish engulfing. For a bullish engulfing, the wick and the body of the bullish candle has to engulf the bearish candle. Okay? If it doesn't engulf the bearish candle, that is not an engulfing. And I'll explain why to you guys when we start to expatiate on engulfings. Okay? If it does not engulf the wick of this candle, it's not a valid engulfing. Right? So this is a form of engulfing where market just engulf just one candle. So this bearish candle only engulf one bullish candle, right? This bullish candle only engulf one bearish candle. This one to just one, just one. So another type of SNR is when the candle that is being engulfed, we have two candles being engulfed. So when you have an engulfing, a bearish engulfing, for instance, this candle, engulfing these two bullish candles, a bearish candle right here, engulf the two bullish candles. And you notice that the wick of the second bullish candle was engulfed. That is why it is a valid engulfing. If this engulfing just closed somewhere here and the wick did not engulf it, we don't consider it as an engulfing. It just closed somewhere there. We don't consider that as an engulfing. It has to take the whole candle out. Okay, it has to take the whole candle out. Okay, so this is also another type. Okay, where these two candles completely engulfed. So they are completely engulfed. The two candles completely engulfed. These two candles completely engulfed by this bullish candle, and then the wick was also taken. That is why they are valid SNR level. So this is the first form. The first form, one bearish candle engulf one bullish candle for a bearish engulfing. For a bullish engulfing, one bullish candle engulf one bearish candle, including the wick for a bullish engulfing. Second form of engulfing, one bearish candle engulf two bullish candle, one, two. We also have a bearish engulfing. For a bullish engulfing, one bullish candle engulf two bearish candles. Now, for the last type of engulfing, this is the last type of engulfing. It is when three bearish candles, so this is a bearish engulfing. A bearish engulfing is what we call EG sell, right? EG sell. So this is a bearish engulfing. See, three candles engulfed one bullish candle. Okay, so you have one, two, three. And see, they took the wick of that bullish candle. This is a bearish engulfing, but it's a different form of engulfing. Why? Because you needed three candles to engulf the bullish candle. For a bullish scenario, see, three bullish candles engulfed a single bearish candle, took the wick, right? Took the wick. So that is very important. Took the wick. Okay. Now let's see. Let's see examples on the chart. Right? Bearish engulfing, right? Bearish engulfing. Why? This bearish candle engulfed the whole bullish candle. Okay? Bearish engulfing. Why? These three candles engulf this bullish candle. Okay? Bearish engulfing. Okay? This is also a bearish engulfing. One, two, three, right? These three candles, they completely engulfed this candle, this buy candle. That's why when price came back, what do you see? see some sign of sell. See cells developing, okay? Bullish engulfing, change bullish to green. Okay, bullish engulfing. This bullish candle completely engulfed this candle, this bearish candle. All right, another example, bullish engulfing. Why is this a bullish engulfing? Candle one, candle two, engulfed this candle. Bullish candle one, bullish candle two, engulfed this bearish candle. So your idea of engulfing has to be very flexible, okay? All right, bullish engulfing also. This candle, see this candle now. Did it take the wick? Yes, makes it valid. The bullish candle took the wick of the bearish candle, engulfed the wick also. But he didn't engulf it with the body, no, but he engulfed it with his own wick. See that? So either the body of the bearish candle or the wick of the bearish candle has to be above this for it to be valid. So what happened? Price came, tapped, and then we started to buy. Okay, okay, more examples, more examples. See another bearish engulf. Bearish engulf right here. The bearish engulfing. Why is this valid? See, the wick took out this guy. Okay, so when price retraced, what happened? We started to sell. Okay, bearish engulfing. Now, is this a valid engulfing? This one. Is this a valid bullish engulfing? Considering this candle, one candle. No, it's not. Why? Because this guy did not take out the wick of this sell candle. So we cannot call this a bullish engulfing. It's not valid. It's not valid. Okay? Cannot call it a bullish engulfing because it's not valid. Right? Another example. See this big bearish engulfing, right? Just one candle engulfed it. Just one candle. Okay? So another example. Bullish engulfing. Completely engulfed. Okay? Price completely engulfed this candle. Completely. The bullish candle engulfed the bearish candle. Another example, this one. Change to red. Completely engulfed. Okay? So very important, very, very important. Must remember that engulfing has to completely engulf. So it can be this type, this form, can be this form, or it can be this form. Okay. The idea is that the buy pressure for a bearish engulfing, the buy pressure is completely absorbed by the sellers. We were buying before, and then sellers completely took control. We were selling before, right? Buyers completely took control. We were buying, candle one buying, candle two buying, but sellers complete control. We were selling one, two, buyers complete control. Okay, we were buying just one candle, sellers one, two, three, complete control, right? We were selling, buyers one, two, three, complete control. So that shows an important part in Malaysian SNR. So when we consider Malaysian SNR, engulfings are very, very important. And this is a secret. This is a secret why engulfings are very important. I mentioned earlier that engulfing or engulfings are the way they have the highest amount of patterns. Okay, I'm looking for the what go? Did it go? Did it go? Oh goodness, everything I read has gone. Okay, no problem. All right. So I mentioned earlier that the engulfing candle has the highest amount of support and resistance level. So again, let me draw a bearish engulfing for an example. Okay, so this is a bearish engulfing. Change to green. Oh, I'm sorry, wrong line. Complete engulf. Now, I'm going to draw out the schematics for you to have an idea what I'm talking about. Engulfing candles are the only set of pattern where you will find double breakouts. I'm going to come back to this by the time we start to talk about breakout SNR. But let me, because we're talking about engulfing, let's just cover everything about engulfing now. So when price opens here, this is a bullish candle. We're going to come lower, we're going to come higher, and then we close here, which is the opening of the bearish candle, and we'll go up a little, and then we'll come all the way down and close. Now, where is your first breakout? Your first breakout is at this level, okay? Because this level was supposed to be a support and resistance level, right? This is a V, support level, price broke, okay? And then the next level was this level, price broke. So first breakout, second breakout. This only happens with engulfings. For a buy scenario, okay? For buy scenario, okay, I have to draw it, right? To draw this. This only happens with engulfing. So that's why one of the very good ways to confirm your trade setup is by mastering engulfings. So now this is a bearish candle. A bearish candle opens at a high price, right? Goes up, then comes to this low, and then closes at this price, which is the same opening price of this candle, then comes this way, come higher, and then close here. Where's your first breakout? This is the first breakout right here. We broke out of this resistance level. This is an N, right? This is N. We broke out of that N, and then the second level, this level, only happens with engulfings. That's why they are so important. And then price can choose to use any of this SNR. I can use this classic SNR, and so on and so forth. So we mentioned engulfings as part of our SNR levels, engulfings, then classic SNR. So what's a classic SNR? Your classic SNR is an SNR level on your engulfing, or is the last SNR level on the engulfing. So for this bearish engulfing, where is the last SNR level? This guy, right? This is an SNR level, the opening price SNR level, this one SNR level. But where is the last one? The end, this guy, for a bearish engulfing. For a bullish engulfing, where is the last SNR level? This guy, which is the closing price of this and the opening price of this buy. That's why they are called classic SNR. You see, the idea of classic SNR is that the market at any point likes to go to the extreme. Market loves the extreme. The extreme is a very important place, or one of the best places for market to tap and then start to go. Why? Because when you want to buy at a very lower price. For example, if you're buying a commodity and the price is here, there are buyers here, right? You see that there's enough reason to buy here. Okay. You also see that there's enough reason to buy here. Where will you prefer to buy? You will prefer to buy at a much cheaper price. So you prefer for market to come this way, tap and go. Can market come like this and go? Yes, it can, but you might not even be happy. Why won't you be happy? Because you know you could have gotten this commodity for a cheaper price. Okay, market can come here and go, but you'd be like, oh God, they scammed me at the market. You could have bought it at this much cheaper price. That is the idea of classic SNR. All right. The same thing for sell situations, right? In a sell, when you want to sell a product, do you want to sell at a cheap price or at a high price? As a seller, if I want to sell anything, I want to sell it at a high price so that I can make more gains, right? So if I'm a seller and I'm coming this way, pam, 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 and I sell my goods here, I'm still going to be feeling like, oh, there are people in the market that are selling their own at a much. So I'm selling, let's say I'm selling for $500 here. And then there are people here selling for 1.5, the same commodity. Will I be happy? No, I won't be happy, right? I would still want to come to the classic SNR, to the last, to the extreme end, where I can get the best, where I can sell my market to the best buyers who want to buy at high prices. Okay, so let's see example. So that's classic SNR, okay? Classic SNR. So that's why we have to talk about engulfing first, because engulfing simplifies everything. The classic SNR, I said, because price loves going to the extreme, right? Because price loves going to the extreme. Okay, price loves going to the extreme. Okay, let's see examples on the chart. See examples. Let's go to the daily actually. Okay, so let's start here. Start here. Let's see how far we can go. So extreme, yes. What happens? Tapped, started to go up, right? Is this extreme? No, not extreme. So let's move on. Let's move on. Extreme? Yes. Price come to it? No. Okay. Let's move on. Let's move on. All right. So this engulfing formed. The price come to the extreme of the engulfing? Yes. Classic SNR. Classic SNR. Okay, let's go. 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 Engulfing formed. See, this is a valid engulfing. Why? The week took out this week. Okay. So price came to the extreme of the engulfing, tapped, started to sell. Okay. Another one right here. Extreme, yes. Price tapped the extreme of the engulfing, started to sell. Okay. Another one. Extreme. Is this an engulfing? Yes. Come on. These two candles engulfed this guy, right? They engulfed it. Change to green. Oh no, change the wrong color. All right, change this to green. Okay, we're good. All right, extreme. Yes, tapped, started to buy. Price loves the extreme. Okay, this candle, these three candle, did they engulf this guy? Yes, they did. Okay, so where's your SNR level? The extreme, of course. Tap, started to buy. Okay, price loves the extreme. Extreme, tap, sell. Okay, let's see more examples. More examples, more and more examples. All right, extreme, classic SNR, tap, but extreme of the engulfing, tap, but extreme of this engulfing, tap, sold. Extreme, tap, see. Ah, nobody say he didn't tap, he didn't tap. Oh, come on, come closer. Oh, it's not an engulfing. Come closer, look closer. Is this a valid engulfing? Yes, this week took out the week of this engulfing, right? The week took out the week of this engulfing. The body is super bigger than this, engulfed it. Did it come to the classic SNR level? Yes, tapped and then started to buy. Okay, more examples, more examples. Let's see one more example. All right, is this an engulfing? Yes, it is an engulfing. Why? Why? It's not engulfing. It is an engulfing. Sell can do, indecision, sell can do, engulfed, man. All right, extreme. Yes. Did it tap? Yes. Sold. Okay. Extreme markets will always sell. Classic SNR? Yes. Tap, but extreme? Yes. Tap, but okay. Market will always use the extreme. The extreme. Okay. Market will always use the extreme. All right. Another example. Extreme of the engulfing, right? That's your classic SNR. Extremes of engulfing. Tapped and then sold. Okay, so enough example for engulfing. So I'll give an assignment about this later. So we've spoken about engulfings, we've spoken about classic SNR. So the next type of SNR levels are HNS. HNS. Now, the idea behind HNS, we cannot also leave engulfings out of it. See, that's the interesting thing, right? HNS is what is commonly called head and shoulders. Head and shoulders. Okay. HNS is commonly called head and shoulders. And how does HNS looks like. So we have, oh goodness, what happened? What happened? Okay, sorry, I have to write that out again. So we have HNS. So for HNS, you have the left shoulder, you have the apex, you have the right shoulder, which is your entry, and then you buy. So this is a buy scenario. This is the left shoulder, the apex, and then you buy. Now, there are two types of HNS. So for the first type, you can see that this guy might take out the left shoulder. So sometimes there might be a breakout here, and sometimes there won't be a breakout. So the second type is this. You have the left shoulder, you have the apex, breaks out, come, and then go. So where is your entry? Your entry is at the left shoulder. So you draw the left shoulder, so you enter at the left shoulder. Same thing here. So this is for buy scenario, right? So for sell scenario, sell, sell, sell. You have your left shoulder, you have your apex, can break, may not break. You turn to the left shoulder and then sell. Okay, second type, left shoulder, apex, breaks, return, and then sell. Okay, so this HNS, 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 all right? HNS. Okay, guys, give me a minute. All right, let's get back to it. Teaching for an hour now. So HNS, remember this pattern, and remember I mentioned earlier that line charts is a good way to capture support and resistance levels. Now, the classic SNR level can be a continuation SNR or a reversal SNR. And that's why some of the things we do, for example, at this point, we are continuing this buy scenario, right? We're continuing. So at this point, it's a continuation setup. Classic SNR can be continuation setup. The same thing here. This we were buying and then we started to sell. So this classic SNR became a reversal setup. So that's classic SNR for you. It can be continuation, it can be reversal. At this point, we're continuing this sell, so it's a continuation setup. But for HNS, HNS are usually a reversal setup. So you look for HNS when you are considering that market is going to, maybe you were buying before, market was market was selling, bam, 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 and then you want to start buying. What do you look for? You look for an HNS level to buy from. Okay, selling, breakout, HNS level to buy from. Okay, we're buying, came down, HNS level to sell from. So we were at this point selling, right? Sellers are red. At this point, from here, we want to buy. Okay, that's HNS. So HNS is more of a reversal pattern. And the reason why I'm going to be careful about using the word reversal is because when you mention the word reversal, people think price is then going to drop 1,000 pips. No, a reversal can be very small. Okay, it can just be a retracement. You can look for an SNR level when you're looking when an HNS level, sorry, for retracement. So it's not just reversal that has to go, and maybe price has to, because we are talking about reversal, price has to go boom. No, for example, let me show you an example. Now, the overall trend from here to here is bullish. We are buying, right? But in between some guys here, right, we had sell pressure. So one of the ways I can use to re-enter my buys or to enter this buy continuation is to look for HNS levels to trade from. Okay, HNS. Now, let's see example. Right? Let me go a bit lower. Yeah, I'm not getting what I want. Sorry. Okay, let's go to a different time frame. Okay, left shoulder, right? This is an H4, right? Left shoulder, see, price tapped, then started to buy. Okay, price tapped, started to buy. Let's see more examples. Okay, left shoulder, left shoulder. Let's go, let's go, left shoulder. Now, in this scenario, so we were buying initially, right? And then left shoulder, this guy tapped, then we sold, right? But was it a sale that went on and on? No, right? But it just tells you that we want to have a slight change from what we were having before. That's HNS for you, okay? A slight change from what we were having before. Okay, let's see more examples here. See this now. Left shoulder, apex, right? Did this guy break? No. Okay, but see, we tap, tap, then we started to buy. What were we doing before? We were selling before. So buy confirmation from this HNS. That's HNS for you, right? HNS for you. HNS for you. So for example, at this point, we were buying. If you go to a much lower time frame, probably going to see your sales setup, your HNS setup here. Okay? Well, you don't have to go that far. Another example right here. Left shoulder. This is the apex. Tap. Yes. Price taps so precise. And then we started to sell. Okay, price tap started to sell. Came to this level. So what SNR level is this? All right, someone should answer me. What SNR level is this? What type of SNR level is it? All right, guys. Oh, the charts. Classic SNR, very good. That's a classic SNR level. Okay, classic SNR level. Okay, so let's see more examples. HNS, HNS, more examples. All right, see, buy situation, right? Then you add this HNS, HNS. Okay, the price tap, then started to sell. HNS, that's HNS for you. Okay, it's HNS for you. More examples. Oh, we've been here before. Okay, let's go far, 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 far wide. Far we go. All right, guys. So that's HNS for you, okay? I'll find any longer. Okay, see more example. Last examples, okay? Left shoulder. Oh, why is it that far? It can be that far. You can make it that far as long as you have your apex above that level, okay? Left shoulder, then you have apex. And what happened? Price tapped, then started to sell, okay? Left shoulder, tap, started to sell. Another example right here. See this. This is a left shoulder. This apex. Yes, yes. So left shoulder. Let's see what happens. Tap. So precise, right? So precise. Super precise. HNS, super precise. Tap. What were we doing before? Market was buying before. So HNS usually for reversal setups. Reversal setups. Okay. Last example, I promise. Promise last. After this, no more example. Right? See, left shoulder, apex. Left shoulder, apex. See this? Did we tap? Tell me we tapped. Tell me we tapped. Oh, genius, right? Genius. Tap, side by. Okay, so that's HNS. Okay, so we've spoken about engulfings. Engulfings. Where is everything I wrote? Where are you? Why do these guys keep disappearing? Oh no, it's still here. Now it's up here. All right, so HNS, spoken about HNS, spoken about engulfing, spoken about classic SNR. Now, the next type of SNR I wrote in the earlier one was open and close levels. Open and close levels. And this is going to take us back to the idea of candlestick anatomy that I mentioned earlier. Open and close levels. Now, these levels are also called gap levels. Now, remember we said that for a buy candle, at the closing price of a buy candle, what we have is what? Are you there? Can someone help? At the closing price of a buy candle, what do we have? At the closing price of a buy candle. I need a response. You guys can mute your mic, right? Yes, so at the closing price of buy candle, we have resistance. Okay. Okay. At the closing price of buy candle, we have resistance. At the opening price of buy candle, what do we have? Opening price of buy candle, what do we have? This is opening price, right? What do we have here at the opening price? Support. Good. We have support at the opening price. So now, guys, I want you to look at this. This phenomenon is what we call the open close levels. Why? Because where a candle closed, another candle open of the same type. So a bullish candle closed here, another bullish candle opened here to continue price higher. For a bearish scenario, see, the bearish candle closed here, another bearish candle opened here at this exact same price. So that tells you that there is a lot of buy momentum in the market, right? That tells you what? There's a lot of what? Buy momentum in the market. So for buy scenario, this is buy scenario. You have this buy candle, another buy candle. So what's the next thing you want to do? When price comes to this level, right? Okay, let's see. When price comes to this level, right? Something like this, taps. What do you expect price to do? You expect price to buy, right? Why? Buy candle, buy candle, buy momentum. Open close levels. Closing price of this is what? Resistance. Opening price of this is support. So we are going to follow the new candle that just formed. We're not going to follow this old one because this one is now resistance that has now become support. You see why I had to explain this thing earlier, okay? This is resistance, right? For this candle, because it's the closing price. This is support for this candle. Why? Because it's the opening price. So that means resistance of this candle has now become support. So when price come back to that level, what do you do as support? You buy. You want to buy, right? The same thing with sell scenario. Now see. Sold, closed right here. Okay, closed at this point. Then we see another bearish candle open at that same level. So at the closing price of sell candles, what do we have? Support. Remember that. Closing price of sell candle, we have support. At the opening price of sell candle, we have resistance. Now, that means this closing price support has now become resistance because of the opening price of this sell candle. So what happens when price gets to resistance? We sell. We just want to sell. So you sell. You sell. That's gap level for you. The idea is that buy, good buy momentum, buy at support. Sell, good sell momentum, you sell. Now let's see if this really works. Does this work in the market? Let's see. Again, gap levels are continuation setups. So you look for them when you're expecting price to continue in a particular direction. Okay. First example, first example, first example, first example. All right. I need someone to mark the gap level in this area. Okay. Mark the gap level in this area. Can use the annotate button and mark. All right, guys, I'm waiting for someone to mark that gap level. Yeah, yeah, yeah. Somebody's marking this for me, yeah? Where is the gap level? Okay, Joshua, I'm not seeing what you're marking. Can you mark it very well, like a straight line? Okay. Anybody marking? Can you see this? This is an open close level, right? Gap level. Price, a buy candle, buy candle. What happens? Price came, tap, bought. Okay. But another example right here. We have another example right here. So we have this buy candle, right? This guy came all the way, tap here. When this guy was going to continue, where did he come to? Came to this particular guy, started to go, started to go up. Another example here. We keep having them. There, you see, ceaseless examples. See that. See this. Okay. Oh, sorry. I was going to show you guys. Let me take that off, really. All right. So, okay. So, gap level. This is a gap level. Continuation. So what you look for it when you're looking for continuations, right? Continuations. So another gap level right here. Bye, right? Continuations, right? Another gap level. Another gap level. Another gap level. You can see this is like magic. Is this magic? No. This is SNR. Simple support and resistance, right? See this gap level, open and close. See, did we sell? Yes. Why? Gap level. That's why. That's the reason why. There are more examples, looking for more, right? Another gap level right here. So this bye, right? Gap level, support and resistance. Okay, okay, more examples. Wow, goodness. Okay, see this gap, bye, right? Gap level. Market is just so hilarious. The way it uses this level. See this buy level, gap level. So yeah, I think let's just look for two more. See two more, see two more for my eyes at. Okay, another one, gap level, another one, gap level. Okay, so yeah, that's that about gap levels. So gap levels very important. Okay, they're very important. So we've seen classic scenarios, we've seen engulfings, we've seen HMS, seen gap levels. Okay, now the last type of SNR, which is where we are going to stop today, is what I call or what is called, no me, I didn't call it anything. But what is called, sorry, uh, sorry, right. This is called Breakout SNR. Some people call it flipped SNR. And you call Breakout SNR, you can call flip SNR. And why is this called Breakout SNR? Remember when I said when a support gets broken, what does it become? Resistance, right? The same thing with a resistance that gets broken. What does it become? Support. Okay, so you can have breakout SNR for all these SNR levels I mentioned before. You can have breakout SNR for classic SNR, breakout SNR for HNS called broken HNS. You can have breakout SNRs for gap levels called broken gap levels because they were supposed to be buy or support, now they are resistance. Okay, so breakout SNR for engulfing, right? You can have an engulfing candle, right? So you expect that when price comes to this kind of engulfing, in this scenario, price would sell, right? But no, price breaks this engulfing. So what happens next? Breaks it. What happens next is that price will come to that level and then buy from it. Why? Sorry. Let me make a proper example for you guys. It's the last one. Don't worry. So let's say this engulfing. Green candle. So what happened? This is an engulfing sell, right? So you expect price to come and sell, right? But there are times that price breaks this, taps here, and buy. So in that scenario, this is called an engulfing fill, right? Because this engulfing sell has failed to sell price. Rather, price broke it, and now we are buying from it. So where we are supposed to sell from, we are now buying from it, right? For a buy scenario where you have a buy engulfing, so this is a buy engulfing, for example. So you have something like this. So typically you're expecting price to come, tap and buy. But no, price say no, I'm not buying. Breaks, returns to this level. What will happen? Sell. So this is an engulfing fill. This is a type of breakout SNR for engulfings. All right? Type of breakout SNR for what? For engulfings. Now, in this scenario, this is a type of breakout SNR for classic SNR because this is the extreme, right? Price breaks the extreme, return, buy. This is the extreme for sales. You should sell here at this classic level, but no, broke, return, buy. Sorry, broke, this one is sell, this one is buy. Breakout SNR, flip SNR. Okay. For open and close levels, for HNS first, for HNS, it's the same thing. Okay. For HNS, it's the exact same thing. So for an HNS level, you expect price to buy from this area. Okay. Let's see this. Expect price to buy here. But with that happen, no, price breaks. Price now returns to that level and sell. This is called a broken HNS. We're supposed to buy here and start going up, right? But no, that did not happen, man. That did not happen. Rather, we broke the level, we broke this level down, and then we'll sell from it. Broken HNS. The same scenario here for sales, right? So this is the level, right? So we're supposed to sell from this level. Rather than selling for a broken HNS, price will break, use this level, and then buy from it. So breakout SNR is a type of SNR for all the SNR I've said. So for engulfing, we have engulfing fill. That's the type of breakout SNR. For classic SNR, we have this normal support become resistance. For HNS, we have broken HNS. For gap levels, we have broken gap levels. So for example, in this scenario, rather than price coming here to buy, price will break this, return, and sell. Same thing for this scenario. Rather than price coming here to sell, price will break it, tap, and buy. Breakout SNR. Okay, breakout SNR. Right. Let's see some examples on the chart. Let's see some examples on the chart. Some examples on the chart. 109 drawings. Should I share this? Yes. Now, guys, let's see some examples. So I'm going to be asking you what kind of breakout SNR I mark. So you have to tell me what kind of breakout SNR I mark. Okay. Let's see the first one. Let's start from a very far place, right? So can have enough data to look at. Let's start from here. Okay. This is November. So let's see. Let's go. 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 I'm seeing some levels, but I don't want you guys to get confused. So, all right. What kind of breakout SNR is this? See this. This is a gap level, right? Or open and close level where we bought from. This guy broke it. So the next guy that comes, what would happen? Start to sell from it. Why? It's a broken gap. Okay? Broken gap, right? Broken open and close levels, broken gap level. Okay? Number one example. See more. Today. Wow. Beautiful day. Okay, now another example. What kind of breakout SNR is this? What kind of flipped SNR is this? Is this the extreme? Yes. This two candle engulfs this guy, right? Did we tap? We tapped, sold for a little while, and then we broke it. So what happens when we come back to that same level? So we bought how many pips? I bet it's more than 100 pips. See, 170 pips, right? Just from breakout SNR. Classic breakout SNR, right? Okay, more examples. Let's see. Now let's see if we can find a broken HMS. Broken HMS, always super interesting. Super. Now this is a broken HMS here. Hope you guys can see it. Okay. Now, left shoulder. Yes. This is the left shoulder. This is the apex, right? We're buying before, so you probably wanted to start selling from here. So break. Did we sell? No, we did not sell. Rather, price broke, return to it, and started to buy with conference with this gap level. So more reasons for you to start buying from that area. Okay, so that's broken HNS, right? That's broken HNS. More examples. Broken HNS, they're usually very good places to trade from, right? Very good. If you can trade from a broken HNS level, they're good to go. Okay. Another example right here. Classic SNR. Yes. So price came, tagged, bought, broke, support, becomes resistance. And what do you do here? You sell. Okay. You sell. Breakout SNR. Classic type. Okay. See more examples. More examples. More examples. More examples. Trying to find an interesting example. Okay, this is one. All right, there's another one. Now, for this one, this is very interesting. Why? Because this is a breakout. This is a classic SNR. Broke, right? Broke, started to go up. Plus more reasons to enter this one is because there's another classic SNR here. So we see that most times when you have two SNR levels at around the same place, price would usually respect that level. Okay, so we have this breakout SNR 1, classic SNR 2, enter, buy. Okay, right? Let's see more, more breakout SNRs. So breakout SNRs can either be breakout for classic, can be breakout gap levels, it can be breakout HNS, can be breakout engulfing when we have engulfing fill. Let's see if you can get some engulfing fill. Yes, that's the big one, right? See, is this an engulfing? Yes. So what happened? Broke, tap, started to sell. Okay, that's an engulfing fill. Another engulfing fill right here. It's an engulfing fill, right? This is an engulfing. So price was supposed to buy from here, but what happened? We broke it. We returned to it, and then we started to sell. Okay, return, started to sell. See, is this the extreme? Yes. The price tapped, started to sell. Okay, more examples. Classic SNR. Yeah, classic SNR actually. See this classic SNR. Okay, broke. What did we see? Tap, started to sell. That's how the market works, guys. That's how it works. That's how the market works. Okay, that's how the market works. Another one, classic SNR. We bought from it here. We broke, tap back, started to sell. That's exactly how it works. So the idea is to be able to identify these levels. The moment you can identify these levels, you've solved 50% of your SNR problems. Because markets moves by buying and selling in the marketplace. That's how market moves. Buyers buy at support, sellers sell at resistance. So the idea is to be able to know what kind of SNL level should I buy from. Because when you look at the market does not buy and sell from all the supports. For example, see this area now. This is a support. I'm sorry, this is a resistance. Did anything happen here? No, nothing happened. This is an HNS. The price come back and tap it. No, the price didn't come back and tap it. Right? This is a classic SNL. The price get to it. No, price didn't get to it. So the idea is to be able to know, okay, if price is going to move, if price is going to go from support to resistance, which support should I buy from? Which resistance should I sell from? First assignment, to be able to identify all these SNR levels, engulfings, classic SNR, HNS levels, broken gap levels, broken HNS, broken classic SNR, broken engulfing fill, be able to identify them. The moment you are able to identify them, problem solved. The next challenge is to know the exact one to trade from. Okay, see, in this scenario, is this an engulfing? Yes. But why the price leave? Why the price not buy from here? Why the price come all the way to this level and bought from here? You must know which engulfing, which SNR, which one to buy from. Which one should you trade from? Which one should you not trade from? Which SNR level should you expect price to break? Which one will price not break? And these are the things I'm going to be covering in the next class. So in the next class, which is going to be tomorrow, we're going to vote on the time. For the voting, the time that was voted for everybody was 7 a.m. But I saw that pretty late. By the time I saw it last night, it was 12 noon. That was, oh, I think let me stop recording.